Welcome to Travisa Financial. Travisa Financial is a purpose-driven wholesale lender. We're not your average wholesale lender. We're a team on a mission to help you open more doors.
Is offer products to home buyers that otherwise would not be able to get into a home. And there's so many.
Reach more families and redefine what's possible for first-time homebuyers, especially underserved communities.
Having diverse lending products opens doors for folks that otherwise might not have access. And so it's understanding different cultures, it's understanding different backgrounds, and the fact that you might not have had the opportunities that others have had, but there's still a way for you to get into homeownership. And so understanding that those different backgrounds exist.
At Travisa Financial, we believe homeownership is more than just a transaction. It's transformation. It's the foundation for building wealth, stability, and legacy. Together with borrowers, we're committed to making that transformation real. Through education, transparency, and heart, we help more families step confidently into homeownership.
It seems so much further away that it's more important today to focus on this affordable lending issue, right? Or the affordable lending challenge to get people into homes.
Because when you know better, you build better. Every borrower you empower, every loan you close, every set of keys you deliver is proof that dreams don't have barriers, only bridges.
For Travisa, it's putting some strength on that bridge, because how you help a broker close a loan, the understanding of the dynamics of that consumer who's now getting older because it's so much harder, who has profiles that we're all trying to figure out, right? When you talk about millennials and Gen Z and their income and all that. And a lot of lenders go, this is just too much damn work. And I don't know if I want to do this because it might not be worth it. I don't know how to manufacture this. Where Travisa can come in and go, look, let's manufacture loans and let's help brokers get these people across, and let's strengthen the bridge, right? It's going to take us some time. It doesn't happen like overnight, but we know how to do it pretty well.
Join us in building bridges that turn the dream of homeownership into reality. Because at Travisa Financial, no one serves first-time homebuyers better.
Hello, everybody, and welcome to our EEP Power Up Deal Desk Thursday. I am glad you guys can join us today. I wanted to give you a little bit of information about myself, about Travisa, and then we can go ahead and we can get started. If you guys have any questions, I have some Q&A at the end. But for anybody that's new, I'm going to go over the basics of our EEP program. So a little bit about myself. My name is Monique Manaya. I've been in the mortgage industry since 1997 in all areas, from being a broker to wholesale, retail, processor, loan officer, branch manager, and most recently I was the EEP production manager for the government entity over at Tule River. So I ran processing, closing, funding. I ran the tribal signers along with title approval. I helped in developing a lot of the processes and procedures that are in place. And I love this program. I think that this program definitely it's not your traditional mortgage loan. And so there's definitely many turning wheels, but luckily I'm here to help you get through the processes. And at the end of the day, we're helping people get into homes that otherwise could never get into homes. So I'm definitely excited to be here to help you all. Travisa Financial, one reason why I picked to come over here is because I feel like they definitely understand that underserved families are not getting into homes. And so they're providing these innovative programs that definitely allow everybody to have that option to get the generational wealth through homeownership. So government entity, a little bit about government entities is that, well, they can utilize FHA financing, non-owner occupied, And so in this specific situation, we have a home buyer that doesn't qualify. They don't qualify for the traditional FHA financing. And so what we're going to do is we're going to look at putting them on our earned equity program. So you're going to submit a file, register a file, submit it over to us. We're going to get it approved, pre-approved through the government entity on the EEP program. Your home buyer is going to go out and they're going to find a home. They're going to find a home of their dreams. They're not going to go out and have to look for a home that is allowing seller financing, because that's very limited and restricting. They get to go out and find the home that they want. They're going to put it under contract, put the earnest money down, and then we have an assignment addendum that is signed by both the buyer and the seller. That is sent over to us. We get that signed by the government entity, and then we can go ahead with the process of the files. So there's 2 files that are running simultaneously. You have your home buyer file that is over with the government entities underwriters. They're just vetting, making sure that this is somebody that they want to enter into agreement with. And then we're also running the FHA loan file for Tule River here at Travisa Financial. As soon as we receive both of our clear to closes, then we're going to prepare FHA loan docs. The government entity is going to prepare the homeownership agreement, in which both parties are going to sign same day simultaneously. We're going to have our FHA loan, and then we're going to have our homeownership agreement with the memorandum that is recorded on title. What this allows is this allows your home buyer to fill the secured interest in the property, because the government entity can't do anything with that home with that memorandum that is recorded on title. Definitely knowing that we're looking at home buyers that do not fit into that traditional mortgage box. Some of the EEP program highlights are 3.5% down for ITIN, non-permanent resident aliens, including DACA. This is also for US citizens. There's low and no credit scores, so we will go down to a 580 credit score, and also allow with no credit scores. We do require some additional alt trade lines if there are no credit scores. 3 months bank statement program, great for your self-employed borrowers. It's great for 1099 workers. We've had some W-2 employees that are, for instance, waiters, waitresses, but then they also receive cash tips. So 3-month bank statement program is definitely a great option to go. And we allow the 50 over 60 DTI. No source or seasoning of funds to close. So it is understood that a lot of people like to save their money at home, save up at home. They may not have the confidence in the financial institutions right now, so there is no sourcing or seasoning for those funds to close. Bankruptcies are okay. For instance, Chapter 7. If they've filed a Chapter 7, has to be reporting on credit reports, but they can go ahead and find their home, get it under contract. We just need to see that the discharge has occurred 1 day prior to closing. All FHA loan types, 1 to 2 units, PUDs, condos, manufactured homes. FHA condos have to be FHA approved. So if you're going to be looking at home shopping with condos, then let's make sure that they're FHA approved. If for some reason you don't have access to pull the FHA case number, please reach out to us and we're more than happy to take a look at that for you. In addition, seller contributions up to 6% of the sales price, which help in offsetting your home buyer's required funds to close. Also contributing towards lowering your home buyer's interest rate by buying down the interest rate. When you're looking at qualifying your borrowers, some of the borrowers that will fit into this program are definitely ones that aren't US citizens, or, they don't qualify for the traditional financing. They may be ITIN, but they don't want to put 20-25% down as other non-QM programs allow for. Again, you're looking for full doc borrowers, but also alt doc for our 3-month bank statement program. lower credit scores, no credit scores, 12-month mortgage history. We only require a 12-month mortgage history, but keep in mind that it does have to be clean, 0 times 30 for those 12 months. Also only needs to show 12 months of employment history and the higher DTIs of the 50 over 60. We do allow gift funds and only need 2 months bank statements for assets and funds to close. But again, remember that if you have any large deposits, we don't source or season them, but at times the underwriter may want just a letter of explanation. They were saving money at home, whatever the situation may be. So providing that up front is typically a good idea. The other funds to close for this transaction that cannot be paid by the seller concessions is going to be the entity's closing costs and the first payment. So your home buyer is going to need to bring in the MRI for the FHA loan, and then they're going to need to bring in the first month's payment and the entity's closing costs. So we have a really great calculation worksheet that can help you calculate what those closing costs are going to be. So if you don't have access to that or you haven't been provided that, reach out to your account executive or myself, and I'm more than happy to get that over to you. I do want to mention for the self-employed borrowers that the standard expense ratio is 45%. Although we do understand that there are some home buyers, 45% is just way too high for what their business entails. So we have a tiered expense ratio, which is based off of whether they're a service business or a product business. So we can definitely look into that to reduce the expenses anywhere from 10 to 25%. Some supporting documentation would need to be provided, such as CPA letters, online or internet documentation. Just something that gives us information on how many employees and the product business or service business that your home buyer provides. So again, referencing back to the ITIN market. So ITIN market, most lenders are requiring anywhere from 15, 20, 25% down. If you want to utilize the bank statement program, you're looking at 12 to 24 months bank statements with really restricted DTIs, typically capped at 43%. And if you do want to go any higher, you need comp factors. In addition to that, high credit scores, 700 plus credit scores. With our Travisa earned equity program, we have the 3.5% down, 3 months bank statements, DTI of 50 over 60, with only one credit bureau of 580 or higher. So I think we have a really competitive market over here for the EEP. We also have a lot of support for you. We have our dedicated EEP questions at travisafinancial.com, which is an email address that you can ask questions, scenarios, things of that nature. We also have our phone line, 877-888-ASK-EEP, and amazing account executives, Norma Summers, Ben Slayton, and then myself, that we're here to help with any sort of questions, anything that you guys need answers to. We're definitely here wanting to support you. So we can go ahead and get to any sort of Q&As. If you have any questions or scenarios that you wanted to go over, I definitely want to talk those over with you. So I believe, I'm not sure if the chat is working today. You can type in the chat, or you can raise your hand. And I have one question here, and they are asking if you can have multiple gifts. Yes, this program allows for multiple gifts. So if you have a few different family members that want to contribute, you can definitely have multiple gifts on this product. Hi, Reginald. How are you today?
I'm good. How are you?
I'm good, thank you.
Okay, what is an entity closing cost?
Okay, so the entity has some closing costs of their own. So as I had mentioned before, you have two loan files that are running. You have the government entity's FHA loan, which is going to provide the funds for the purchase of the home. And then the entity is going to be entering into this homeownership contract with your home buyer. So they have some closing costs on their end. They have some underwriting fees, processing fees. Those fees total about $1,400. And then they have a 0.5% upfront fee. I know that essentially, you know, they're purchasing this home for your home buyer. So those are the fees that are involved on their end. And like I said, I have this worksheet that I could send over to you if you'd like.
Okay, and the seller is not allowed to contribute to those.
The seller is not allowed to contribute to those, no, because we cannot add those to the CD. The seller can only pay towards concessions that are on the FHA CD. And so therefore that leaves some funds to close that the home buyer will need to pay.
Hmm. Okay, thank you.
Yep, you're welcome. Did anybody else have any questions today? All right, perfect. Well, I'm so glad you guys could join us today. We are having our EEP Power Up Deal Desk Thursdays every Thursdays. For now, we have put a hold on our Scenario Mondays through the end of the year. There's a lot of fun holiday stuff going on, and so we wanted to make sure that we were utilizing everybody's time accordingly. But again, if you have any questions at all, don't wait for these webinars. Reach out to your account executives or myself. We're more than happy to help you out. Everybody have a wonderful rest of your day, and I look forward to talking with you. Thanks. Bye.